So the theme here today, Monday, December 5th, is that there's been strong U.S. economic data, which would imply that the economy is getting healthier, right? But that on the flip side makes market participants worried that the Fed is going to keep tightening and not let up on that. So today we had weakness in the market. Accordingly, you can see here, Dow tumbles 300 points, S&P 500 skids 1.3% as investors eye Fed response to strong U.S. economic data. Yes, it's headline, this drama, it's supposed to get your attention. The thing is, it's always good to take this and compare back to data. And if you're new here, I'm Hema Reddy, and I look at price charts and related indicators and analysis to help boost my trading and that of my tribe. So we're going to head over to the chart of the SPY, that's the S&P 500 ETF, and look at all three time frames and see what signs are we getting that this bear market rally is over, if that's the case, or that it could still have legs. Now, before we do that, very important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. All right, so what you see here is the S&P 500 Spider ETF chart. So SPY is the ticker. Now, this is a monthly chart, every candle representing 1 month of price action, and I am bringing you up to speed on what's happened since I last did a deep dive on this in early November, ahead of the election day here in the US. So we recovered off of the low from October. November ended up strong, closing at its high. And here in December so far, we're hovering near this 411.73 level. Okay, so that's the high from the month ending September. And it's really close to the 75% retracement of the latest down move. So this is an important resistance area, and we're going to go a lower time frame to see if there are additional clues there. All right, so all I did was take it down from a monthly to a weekly chart. And you can see here that we have recent support that has developed at a couple levels. So these are potential price floors if things turn lower. I like labeling those in pink so it's easy to differentiate. And I have two here, 390.14 and 368.79. Now, along with the price action in this top part of the chart, I do very much pay attention to the bottom axis of the chart, okay? That is time. And I also look at momentum as measured by my RSI power zones. This is something I deep dive into in my Bull Bear RSI face-off and go really to the next level in the 4 zones RSI coverage system. Now, right now, what I'm seeing here is that bears are still in control in the big picture, and they have been since April, okay? So there's definitely room to roll over, but I'm going to go to the daily chart for one more close-up look to see if we can see even more clues here. All right, so coming to this daily chart, I'm going to add in a new support here at 393.30, that's the most recent higher low that's developed. And I see a trend line that I think might be useful at this juncture. From here to here. And look at that, guys. This trend line that was confirmed back on November 9th, held on November 29th and 30th, has thus far contained today's weakness. Now, this doesn't mean you stick your hand out and buy the trend line, but it does tell me that there's room to push this ETF back up higher. So remember, the ceiling up above that's most immediate is at 410.83 along with 411.73. Okay, one's a projected resistance, one's an actual traded resistance. If we get above that level, the next upside target will be at this level here, 419.96. And then after that would be a return to the most recent peak from August at 431.73. But if we're not able to regroup at this trend line, which it's right there in front of you, you don't have to do much to calculate it, and we continue lower, then the level that bears would need to puncture below is 393.30. That would be the first sign that this whole recovery rally from mid-October is coming undone. But even then, it wouldn't say, hey, we're just unraveling towards the October lows. I would need to see continued weakness below 390.14, which is super close, guys, to this old top from November 1st, to suggest a substantial move to the downside and more weakness from there. So follow the trend line, okay? Allow price, time, and momentum in your charts to guide you and collect that evidence, and then act when you see the weight of the evidence leaning on one directional move. Catch you on the inside.